You know what nobody really tells you about retirement? They don't tell you that the system you paid into for 40 or even 50 years can quietly change the rules when you're not looking. No big announcements, no personal letters explaining what it means for your check, just small changes buried in press releases and technical updates that can directly affect how much money lands in your bank account each month. And in 2026, that's exactly what's happening with Social Security. Now, I'm not here to scare you, push doom and gloom headlines, or sell you anything. I'm here to help you understand, plain and simple, what's changing, what it really means for your income, and how to make sure you're not leaving money on the table that you already earned, because this is your money, you paid for it, and you deserve to understand it. Social Security is not a handout. One of the biggest misconceptions is that Social Security is a government gift. It's not. Every paycheck you earned had money taken out for Social Security. That money wasn't optional. The deal was simple. You pay in while working, and when you retire, the system pays you back. So when changes happen, especially quiet ones, you have every right to know how they affect you. Most retirees don't realize how Social Security works. They think it's as simple as filing paperwork at 62 or 67. That's like saying you understand a car because you can turn the key. There's an entire engine under the hood, and in 2026, it's running differently. What's really changing in 2026? You've seen the headlines, Social Security benefits are going up. COLA increase announced. Technically, yes, benefits are increasing. But what matters isn't the percentage, it's what actually lands in your bank account after deductions. And that's where most people get blindsided. 2025 Cost of Living Adjustment, COLA. For 2026, the Social Security Administration announced a 2.5% COLA. The average benefit is about $1,870 per month, so the increase is roughly $45. $45 sounds decent, but has your cost of living only gone up 2.5%? Groceries, property taxes, home insurance, car insurance, utilities, prescription drugs, real-world expenses are rising faster, and that $45 isn't what you actually take home. Medicare. Part B reality check Medicare premiums are deducted before your check arrives. In 2026, Part B increased to $185 per month, about $10 more than last year. So $45 minus $10, roughly $35 or extra per month, about $420 a year. Helpful? Sure. Life-changing? Not for most people. That's why understanding the details matters. Headlines alone won't protect your income. Why this matters: Social Security was never designed to fund your entire retirement, only about 40% of pre-retirement income. Relying solely on it can be stressful. Combine modest increases with rising healthcare costs, and it's clear why many retirees feel squeezed. If you care about protecting your retirement income, make sure you subscribe to Retirees Info. Like this video. Drop questions in the comments. Your questions shape future videos. Why most people don't see this coming. Social Security is complicated. Full retirement age rules, early retirement reductions, delayed retirement credits, spousal and survivor benefits, earnings limits, Medicare deductions, possible taxation. Most discover the complexity after making irreversible decisions. That's why this conversation matters before small changes become permanent losses. What we'll cover today: how benefits are calculated, when to claim or not, how working affects checks, taxes that quietly reduce benefits, spousal and survivor strategies, how to build a retirement plan that doesn't rely on Social Security alone. No jargon, no politics, just practical information. Working in retirement. Many retirees work part-time or consult after claiming Social Security. That can be smart, but if you don't understand the rules, you could lose thousands in benefits. The big myth: if I work, they'll take my benefits away. False. Temporary reductions apply if you're under full retirement age and exceed earnings limits. Full retirement age and earnings limits. Under FRA, $23,400 limit in 2026, $1 withheld for every $2 over the limit. Year you reach FRA, $62,260 limit, $1 withheld for every $3 over. After FRA, no limits. Earn as much as you want. Withheld money isn't lost forever. It's credited when you reach full retirement age. What counts as earnings applies to wages and self-employment only, not pensions, Social Security, 401k, IRA withdrawals, or investment income. Like, subscribe, and comment if this is clearing things up. Taxation of Social Security. Up to 85% of benefits can be taxed federally, depending on combined income. AGI plus non-taxable interest plus half of Social Security. Thresholds. Single, 25K, 34K, 50% taxable. Above 34K, 85% taxable. Married, 32K, 44K, 50%. Above 44K, 85%. State taxes vary. Roth IRA withdrawals don't count toward combined income. Strategic conversions can reduce taxes. Spousal and survivor benefits. Spousal. Up to 50% of higher earning spouse at FRA cannot grow past FRA, must wait for spouse to file. Divorced, eligible if married, 10 years. Survivor, up to 100% of deceased spouse's benefit, can claim early with reductions or delay for full benefit. Coordinating these benefits can save tens of thousands over a lifetime. Social Security Trust Fund and Future. The trust fund is projected to be depleted around 2034-2035. That doesn't mean checks disappear. Ongoing payroll taxes would cover 75 to 80% of scheduled benefits. Changes are likely, but sudden cuts for current retirees are unlikely. Focus on what you can control: debt, income diversification, flexible spending, healthcare preparedness. Final action. Steps 1. Get clear on your numbers: benefits, Medicare deductions, net deposit, taxes. 2. Understand your claiming decision: early versus delayed, spousal, survivor impact. 3. Coordinate income sources: IRA, 401k, pensions, work, investments. 4. Watch tax traps: combined income, RMDs, capital gains. 5. Control debt: high interest debt erodes peace of mind. 6. Plan healthcare realistically: premiums, deductibles, long-term care. 7. Build flexibility: multiple income sources, emergency fund, adjustable spending. Retirement isn't just about money. It's about stability, independence, dignity, and peace of mind. If this video helped you, subscribe to Retirees Info. Like this video, comment on the topic you want next. Share this video with someone approaching or in retirement. This information is too important to keep to yourself. Social Security isn't perfect, but when you understand it, it becomes a tool instead of a source of stress. My goal is simple: help you make informed decisions, avoid costly mistakes, and enjoy the retirement you earned. I'm Frank, and I'll see you in the next video.